scene as well, and guess what? He's in the studios right now. Sanjiv, hi, good morning. Welcome to Mumbai. Must be quite a relief from the Delhi chill.
Yes, good morning to all of you, and it's a big relief. 8.5 degrees at 6:30 in the morning, and here 25 degrees. I could always switch, but Aisha, जिसने दिल्ली की सर्दी नहीं देखी तो क्या देखा? In the end, you will always miss out the wood for the trees. There is this little bit of weather on the pollution and so on, but it's normal part of the life. And anyway, the markets are rocking, so we are making hay both in Delhi and Bombay.
Absolutely. And you're pretty much on the predicted lines, because yesterday morning you was quite convinced that the market will recover. Recover it has, but are we going to largely consolidate up until earnings?
So yes, yesterday I told you I'll be in the studio and we'll be in the green. And today again we'll be in the green. I mean, this is just the starting of the FIs coming back after a long hiatus. And now you're pricing in all the, good and bad news. Yes, the earnings will be a key because we've run up quite a bit. But I still think there is a lot of room on select stocks. Secondly, Aisha, we all have this opinion that, convert into large caps, even me, but mid caps are still roaring. So I think the participation of mutual funds as far as exposure to PSUs and the larger mid cap basket is still outperforming. And the party continues, but I still think there is steam till the earnings come from some of the tech majors and so on. But banks is something which are looking extremely positive to, for the medium to longer term.
So let's have your banking list. Is it a mix of large caps and smaller banks, or largely focused on the smaller ones?
Well, a mix, but large caps stand to gain more because, the sheer size. I'll just give you a brief. ICICI Bank is my top pick. I think at 990, it's a no-brainer given 6.89 lakh market capitalization and raring to go into that $100 billion club. It has a book size, lending book advances of $150 billion. And, it's trading at 2.85 price to book. Even IREDA and all are 3 plus. So I think there is enough room for ICICI now to go to new highs. And don't play it for the next few days. This is one stock which should be in your portfolio for that 20% upside, which will take it to that $100 billion club. This will be, by the way, the fourth $100 billion entry. Second would be Kotak. I think some of parts Kotak has lagged because of the change of leadership. The present incumbent MD seems to be very much in charge. And some of parts, the businesses are giving me a lot of momentum. So at 1850, 1855, Kotak becomes a no-brainer. I think this is headed to 2000. And last but not least, I think DCB Bank, I've been on it from 120, 125. The Aga Khan Group has just increased its stake at 137. This stock is headed to 185 and 250 by the end of this year.
Okay, and what's going on, Sanjiv? Morning, firstly. When it comes to some of those real estate stocks, of course, there was a very synchronized move that we saw across the board. But how are you reading into that?
Yeah, good morning. So, Avan, you can see from the ground levels that sales are taking place at the highest pace ever. And the double effect of gold, thanks to ladies like you, and the stock market, thanks to mainly us, I think both those combinations are leading to the wealth effect, which is why you're seeing leverage now buying into real estate and bookings going through the roof. Just to simply tell you where I stay, not even 1 kilometer away at Camellias, 100 crore rupees for 10,000 square foot. So you can imagine, I mean, you live once only and you want to live in style, and that is what is now unbundling. Whatever DLF and Godrej are launching are getting lapped up. But a bit of caution, these prices may not be sustainable if any macro or micro mishap happens. But as long as the party is good, I think it's going to be the market leaders, particularly Oberoi, Shobha, DLF and Godrej. These 4 stocks are in our portfolio, and we are pruning down our position over a period of time, but we still think these are stocks to be owned.
Okay, tread with caution. Don't get lured into the mega move that you're seeing in realty names. Right now is not the level that you actually purchase or add on to your positions. But let's also address some of the other stocks in news. And Grasim will issue shares on a right basis at about 1,812 rupees per share. Let me take it across to Ashesha and understand the math. Ashesha?
Well, yes, so the board of Grasim has approved fundraise via rights issue to the tune of 4,000 crores. Rights issue will be issued at a price of 1,812 rupees per share, indicating a discount of nearly 12% to yesterday's closing price. Now, the rights issue ratio is 179:6, which means 6 rights issue shares will be issued for every 179 shares that are held by the shareholders. Proceeds, the company says, will be utilized for repayment of debt, for general corporate purpose and for funding their capex requirements. Record date for the same has been fixed as the 10th of January, which means 9th January will be the last day to buy shares to be eligible for this rights issue. Apart from this, on application, about 453 rupees per share needs to be paid to the company, and the balance payment of about 1359 rupees has to be paid in the form of 3 call options any time before March 2026. Let's also look at the maths then. Estimated price of rights entitlement per share translates to about 251 rupees per share, which is the current market price of 2063 minus the rights entitlement issue price of 1,812 rupees per share. Now, the shareholders have several options. One, of course, they can sell the rights entitlement. If you have 179 shares, you will get a total rights entitlement value of about 1,506 rupees per share, which at the current market price will translate to a dividend of about 8.4 rupees per share. Another option is that you can exercise the rights issue. This, of course, will mean a little bit of hassle because you will have to take care of the payment dates over the next 2 to 3 years. There are no major trading opportunities because the pricing and the rights ratio is not favorable. But yes, a big news flow that has come in for Grasim, 4,000 crore rights issue.
Very much, Ashesha, for breaking that down for us. We'll certainly watch out for this stock in trade. But meantime, let's hear it out from top corporate voices of India Inc. And India is poised to evolve into a developed economy over the next 30 to 40 years with strategic initiatives by the government and a surge in the private sector capex. That's the word coming in from Kumar Mangalam Birla. Let's listen into an excerpt.
We all know that the statistics show that India is well on its way to become a developed economy in the next 30, 40 years, which I think is saying a lot. I also believe that the government is doing all the right things, whether it's building infrastructure, digital properties that are public facing to make this happen. So I think capex from the private sector is also picking up on different fronts. And I think that along with government spend on public infrastructure is potentially a very potent combination.
Right, okay, that's the word coming in from Kumar Mangalam Birla, always bullish on the prospects of India going forward. Let's just take a look at what else was happening in the market. Look at the move on Idea, for instance. That stock held out by about 6.5%. Grasim, of course, a group company. You've already seen the move in Grasim. Let's just bring out the 52-week chart of Grasim. And now with this rights issue, let's see how that stock is going to scale up in trade. But Sanjiv, if I'm not mistaken, you were bullish on Idea as well, right? Of course, at a much lower level. What's the context now on Idea?
Well, it was my birthday and Diwali pick, 25th October and 4th of November. 11 rupees has hit 18 and a half.
Yeah.
I still stand out, 22 is coming. Now, take it with a pinch of salt that if Grasim is going to raise rights, half of that will go into Idea's, as infusion. There will be some more infusion. I don't know who, but there will be another infusion of capital. Aside from that, Aisha, 33% is now owned by Government of India, which has reduced its debt. It has never defaulted on a bank loan. 142 is the ARPU against Bharti, which is crossing 200. And traffic and data are the real outperformers. Now, yes, we are in that clue that there is overhang of debt extra, but the company is addressing that. And since they rebranded themselves and launched, I mean, it's visible that the visibility is increasing. But take it with a little bit of caution that 11 and 18, there is a sea change. So if you have to see your risk reward, it is there. I'll just comment on one more Birla Group company which we are invested in, which we think can make a lot of money for investors, is ABSL AMC. Aditya Birla Sun Life AMC. I think AMCs are a no-brainer, just like insurance, brokerages, exchanges and depositories. And ABSL AMC being the third largest, their new portfolio, their new launches overseas are doing extremely well. This stock has the potential again to hit 750 in this year.
There you have it. Those are some interesting stocks that Sanjeev is throwing up. Meantime, let's also get in a take then, Sanjeev, from you on Dabur, given just going by, the kind of commentary that we've got in terms of the updates.
Yeah, so see, Dabur has been on a slightly low wicket more due to the, their rural presence, and that has seen little bit of a small, lower uptake. And some of the new product launches may have just plateaued. This stock has done nothing. We continue to be overweight on Nestle, Colgate, Marico and Tata Consumer. I think those are four of the stocks. Dabur is going to be a market performer. There are more stocks which are giving you that extra leg. So Nestle, Colgate, Marico and Tata Consumer, in that order, would stand out. Dabur would do well, but it needs more impetus from the rural sides to start to pick up.
Yesterday, I recall that you were talking about the prospects of pharmaceuticals as well. And I remember your top calls were not just banks, but some of the pharma names. Reiterate for the viewers who are just joining in why you have conviction on those pharma names.
Well, Lupin and Aurobindo have been the star performers, which were the dark horses. I have held Lupin for 10 years and, last 3 years have been abysmal. But, their generic pricing and their product launch of portfolios is seeing a lot of traction. And they have distributed the geographies. Plus, in the injectables, Aurobindo was raring to go at 450, all the negatives are priced in. I think their debt reduction has done extremely well and their new product launches are doing well. Now, pharma always used to be a contrarian play. Firstly, it lost out because of COVID and so, but Aisha, if you recall now, it has taken the place of IT as a proxy against a weak dollar. And I still think Dr. Reddy, Lupin, Sun and Aurobindo. By the way, Lupin and Auro are in our two portfolios and Dr. Reddy. And we think these are very good proxy plays. Plus, they have a low beta. Given that if the market sees volatility, their underperformance may be very, very limited.
Vaishali, meantime, I wanted to get in your thoughts. Can't help but, mark the charts of what we witnessed within the realty space time and again. What's your view on the charts?
Sorry, I lost you. Are you asking
Real estate stocks, Vaishali. Yes, real estate.
Yes. So I am focusing on DLF. Yesterday, we saw almost all frontline stocks in realty were doing very well. So realty index on the whole is at all-time high, and I think it is going to still move higher. And stock specific, I would be looking at DLF per se, because if you see the monthly chart, I mean, it has gone, we have seen the previous high of 990. And the way it's moving, I don't see any exhaustion in any of these indicators also. So my pick would be DLF in the front line. Second is Godrej Properties. These two stocks are to my liking. And in the mid cap, we still have scope in Suntech Realty, even Choba Developers. So overall, it is a very positive view.
Of course, has been holding out very well. In fact, let's just take stock of a slew of stocks which are going to be in focus. The companies have come out with the Q3 updates. Let me take it across to Sharad and get in a list of the same. Sharad?
Well, yes, in focus we are having L&T Finance. Over there, the Q3 numbers have been strong, and the retail disbursements as well as the loan book both have gone up by more than 25% on a year-on-year basis. So largely good set of operational update coming when it comes to L&T Finance. Now Dabur also is in focus. Largely inline set of numbers coming in, what was expected, and they are expecting that the consolidated revenue is expected to come in between mid to high single-digit growth in the third quarter of FY24. Interestingly, they have stated that the rural growth is still lagging when it comes to the comparison with the urban markets, but there are some early signs of revival in the consumption which are visible, especially when it comes to the volume-led growth. Apart from this, also Utkarsh Small Finance Bank, good set of operational numbers coming in when you look at the loan portfolio and the deposits, both of them going up between 18 to 30 odd percent. But for IIFL Small Finance Bank, overall the numbers have been mixed, and because of this, because the deposits in advance have been on the good side, the performance has been strong, but the asset quality that has actually kind of degraded, and GNPA and NPA numbers on a sequential basis have come on a higher numbers. Also Sobha, very strong set of operational numbers, and it has achieved its highest ever quarterly revenue when it comes to the sales, and the value growth has been roughly 37% on a year-on-year basis. And last bank which would be in focus for the operational part would be JK Bank, largely inline set of numbers coming in with deposits and gross advances growing up between 9 to 14% on a year-on-year basis.
All right, Hero MotoCorp risk reward ratio according to Morgan Stanley. Very interesting. Risk reward ratio for Hero MotoCorp has been updated. We raise our estimate, and according to an unchanged valuation methodology, we've increased our target price on Hero MotoCorp from 2,500 to 2,800. Very interesting from the house of Morgan Stanley. Now, this is a risk reward update, which essentially means that this is not like in the near term, they feel that Hero MotoCorp has potential to give a spike. No, actually 2,800.
It's 4,100.
Yeah, so they actually expect, so I don't know this report, Bhasin Saab. They are saying that the current price is 4,000 and we think that the fair price from 2,500 will go to 2,800. 4,000 का भाव है.
Sir, report padhiye because there is a lot of reports and in analysts, but you know, in the end, the viewer wonders whether it's a report or it's a transition or an X-ray. Yes, 2,800 may come or no, but I don't know, but Hero Honda first will go to 5,000. Simply on the back that it is a fresh breakout. After 5 years, this stock has outperformed. From 7.5, they're still doing 4.5 lakh bikes, but they are, if you go to the charging station, out of every 4, 3 are Hero. And Ather Energy, the EV is doing extremely well.
That's the Hero Electric, sir. That's not part of Hero MotoCorp.
Hero is the promoter of that.
No. Those two brothers, they separated.
The brothers
actually.
separate, but
So Hero Electric has got nothing to do with Hero MotoCorp. So those are two separate businesses.
correct. But their EV launch is doing, their EV side is doing extremely well. And I think that there is still more juice left in Hero to outperform. But like I said, you know, the stock has already run up from 2,500 to 4,100, and maybe the Morgan people were waiting 2,500 to be an opportunity to buy. They missed it.
Okay, now the next one is Hero, is Maruti. We've changed our risk estimate, and they feel that there could be a 10% decline to Maruti as they've reduced the FY24, FY25 and FY26 estimates by 3, 5 and 4%, as they expect that the industry in a sense will slow down. Now you got to just look at the big picture. 54% of the total cars which have been sold in India, 50% plus is actually SUVs. Within that, Maruti has 20% market share, but Maruti still has a 40% plus market share when it comes to the sedan market. And because they have a 40% plus market share in the sedan market, because SUVs are selling and sedan is not selling, then operatingly that means there could be pressure on Maruti going forward if the sedan market does not pick up. Morgan Stanley's real price target or their price target for Maruti is 11,396. Where is current stock? Let's look at the
10,000.
10,000. Do you think the best of the auto rallies behind us, Bhasin Saab?
I think so. And like I said, Ashok Leland is a standout. I will not change Bajaj Auto at this price as I have it in my portfolio. The buyback news actually would be an opportunity to sell at 7,000. But Ashok Leland stands out to be, I think, the best in play on valuations, on any metric of the bus market and so on. And I think that can be a real outperformer. 250 is my target, which I think can come in the next 3 to 4 months.
All right. Thanks very much, Sanjiv, for dropping by. Good to have you in our studios. And there you have it. That's the view coming in terms of individual stock recommendations. But let's also